Good afternoon. This is Brian Shannon from AlphaTrends.net. Today is Thursday, the 22nd of May, 2008. The market's closed, and we had the market trying to stabilize in here a little bit above recent support at the 139 level. There was a bad tick in there on my SPY, which we'll see in a minute. It didn't go as low as it looks like it did there. But as we know, this market has been struggling with this trend line in the 200-day moving average lately. It held above that trend line and was never able to close above the 200-day moving average yet. And that's where we saw the selling begin to develop just a couple days ago when it first broke some support at 143. And yesterday, of course, we saw it break down below the 141 level, which brought us down to the test of where we are right now. Looking at this 30-minute time frame, you can see that this trend line, the market's trying to stabilize in here a little bit about that 139 level. And what I was saying, and here's the bad tick, that didn't happen in here. But what I was saying yesterday is this looks like the next potential level for support if this market continues lower, and that's at about 138.30, 138.40 or so. As long as the market remains below this 141 level, like I said yesterday, then I think you want to be very cautious about trading alongside. We do have a declining 5-day moving average, and we've still got this pattern of lower highs and lower lows here. It looks like it's stabilizing in here, but it's too early to say whether the market's going to hold up in this area or we're going to see another leg lower. You have to give it a little bit of time to heal in here, and I don't think tomorrow is going to be enough time to salvage the upside for this week. But perhaps next week we can continue to make some improvement. We've got a rising 50-day moving average, and I think breaking below that 138.40 level could bring about a test of that 50-day moving average, which is right now only at about 137. So it's not like a disaster would develop. As far as today's trading, you can see here is pretty quiet. We were basically in a range of 140.20 on the upside and 139.30 on the downside, and just kind of back and forth above and below that daily VWAP. So really not much happened in there today. I don't think you want to call it bullish or bearish yet. Jury's out. Until we see this pattern of lower highs and lower lows interrupted, then you want to remain very cautious about the near term. The Russell 2000 continues to do battle with this important level that we've seen develop here over the last couple of years at $73 a share, and that $73 level, we closed below it yesterday, back up above it today, and today's close was 73.17. This is still bullish action in here. I think breaking this trend line might be what leads us to further downside, and that would be basically below that 72.30 level or so. Getting below 72.30, then I think we're probably in for a test of the 50-day moving average near about $71 a share. So that's kind of two reasons to think that might be an area this market heads down to. One is these prior lows right in here, and then two is that's the location of the rising 50-day moving average. So when we look at a 30-minute time frame, we do still have that pattern of lower highs and lower lows. We didn't get the lower low here late in the day as the market is trying to stabilize here. So maybe back above, like I said yesterday, I thought the market would need to get above 73.50 before we could think that it's okay to get long again. And you can see that's exactly where the market came up to, was about 73.50. So that now becomes a more important level because it's also the location of the declining 5-day moving average. Breaking below 72.50 or so tomorrow, I think then you've got a good shot of seeing this market down to that $71 level, which is again right about where we see that 50-day moving average. So it seems as though this the $71 level becomes more likely, but you can't call for it yet because back above 73.50, then it seems as though this market may be able to dodge a bullet in here. But you got to be very careful in here until we have further clarity and listen to the message of the market for direction, not to any news or that sort of thing. The Nasdaq 100 was up 17 cents today, and this market has again been the strongest this year, and we could look at a trend line that looks like this, and it's starting to catch up to where we see the 200-day moving average as well. And it's encouraging to see the market does continue to find some support at that 200-day moving average. And I think closing above that on a weekly basis tomorrow would allow some bullish players to breathe a little bit easier. So we'll look for it to close above 48 tomorrow. Otherwise, I think breaking below $48 a share, then you've got the potential, and here, let's just take a look at this. This is that trend line that was broken in there. We've got these lower highs. Yesterday, the market came up and tagged that declining 5-day moving average, broke below the 49 level, and you're going to need to see it at 49 at a minimum to be cleared before I think you can be safe on the long side in here. So it needs to stabilize a little bit, but if 48 gives way, then I think you've got the possibility that the market heads down towards about $47 a share and $46.50 below that. So it's the market's trying to stabilize in here, but you can't really say that it really made a recovery today. All we did was get a reprieve from the selling of the last couple days. And overall, the trend of the last 2 months or so has clearly been bullish. So just continue to listen to the message of the market on the shorter term time frames and wait for the right opportunities.